What's up, guys? We got Daniel Sparks in the house.
Good to be here. I'm usually on the other end of this, so I'm excited to be on someone else's channel. So yeah, first time in Atlanta. I'm excited for it.
That's awesome. First time in Atlanta. So where'd you drive in from, flying from?
From Greenville, so about a 2-hour drive from here. Not bad, not bad.
That's awesome. Well, last night we met for the first time officially, and today we're here on camera. So I know you now that much more, and this is our first time meeting, basically.
Yeah.
A couple of convos offline and everything. But for anyone that doesn't know, who is Daniel Sparks?
So basically, I'm a credit card YouTuber, internet racist, pickleball enthusiast, single dad of 4, incel, all of the above. So yeah. But mostly credit card YouTuber at the end of the day. Also a wage slave, so yeah.
Very nice. So my dream of the type of person I love to talk to day in, day out. So
yeah,
very nice. But all the jokes aside, I know you have a wealth of knowledge, a lot of experience in your domain. But I also know more than credit cards, there's also more to just personal finance investing, which we'll definitely talk about that too. So just for our context real quick, I'm 10 years older than Daniel. That really doesn't matter in some ways. But it matters because some of the talks in this podcast of sorts will go into life discussions too.
Yep.
So we'll focus on everything credit cards because I think that's where the audience really wants to hear our kind of intel, and then we'll keep it going. Sound good?
Yeah, we've already talked about so much off camera that I'm sure we'll have some repeat conversations. But yeah, I'm excited, and let's. He's like you said, he's 10 years older, so in the general finance stuff, he knows way more than me. So since I've got here, I've been picking his brain about real estate and stocks and all that stuff. So yeah, it should be a fun vid.
Cool. So let's get into it. Credit cards. Are you team cashback or team travel?
That's an interesting one. I would say I'm team hybrid. So the way that I've said is the best way to play the credit card game, or the way that I've at least laid it out in my videos, is that you get your first card right. Most people already have that step, but I think the best first card, if you're a student, there's some good options. Discover It or Saver Student. If not, the Freedom Rise is a good secured card. US Bank Cash Plus. So you get your first card, build up 6 months of credit, and then you can build your core setup. So then you can build out one of your trifectas. You got the Capital One Duo, the Citi trifecta, and the Chase trifecta. They all have their own perks, but right now I'm suggesting the Citi trifecta mostly. Well, I'm sure we'll talk about that later. Chase obviously is good for beginners too, but after you build that, you can add some supporting cards. So you can start adding your cashback cards, Amazon Prime Visas, the Rakuten, new Rakuten card's good, build MasterCard if you rent, and then you can kind of get into the bonus hunting stage where, you're getting all the American Express cards, and then, airline cards, whatever's popping, maybe some of the other, $95 annual fee cards. And then every year, you got to review your setup and then cancel the ones that aren't serving you anymore. Annual fee ones. So that's how I see it. But short answer is I'm kind of a hybrid setup. So
let me ask you this before we get into the fine details, right? I think you just explained a roadmap, a playbook, that anyone could basically follow, right?
Yeah.
So kind of the beginners to your late stage, right? Mm-hmm. So peeling it back, right? If you're a hybrid setup, I'm going to bring you back a little, right? From the beginning, let's say it's day one, you have no credit score. What's that first credit card you get and why? And then what would be your second one? Let's start there.
Right, me personally, if I'm starting over right now.
Knowing what you know today, yeah.
I think I would go with the US Bank Cash Plus secured. Just because it's such a good cashback card. It's always going to be providing you value no matter what. You can just put your gym membership, your utilities. There's a couple other 5% categories that I'm not thinking of, but there's a bunch of set and forget categories. So that card will always be providing you value no matter what, no annual fee. Or I would go with the Freedom Rise. If I was in college starting, then I would go with Discover It Student, just because you get so much cash back your first year. You get that 5% match. If you use a referral, you get a $100 sign-up bonus, which no other beginner cards will give you. So I think US Bank Cash Plus secured, though. I think that's the best starter option in my opinion.
Okay, and are the main reasons because I guess it's secured, so you have a high chance of approval, and it has some nice earning categories.
Yeah, yeah.
And I guess like the bigger question is once you get that first card, let's say in the US Bank ecosystem, I'm pretty aware from an overall perspective, there's a lot more variety and like nice cards by US Bank. Where like Discover, other than a couple of them, I feel like there's not that many more options if you grow within their ecosystem, if you
Yeah.
want to put it like that.
Yeah, that's another topic. I made a video not too long ago talking about US Bank cards, and I think they kind of fell off a little bit, honestly. They have the Cash Plus, but I mean, that's a little bit of a niche card, and like outside of that, they don't really have anything if you think about it. I mean, the one no annual fee Connect card, that's a good card if you want a no annual fee travel card. You get the couple lounge entrances and then TSA pre-check. And I think there's some no foreign transaction fees and some other cool stuff. But outside of those two cards, they don't have a lot. You look at what is their premium card again? The Altitude Reserve, yeah. Is that right? Mm-hmm. They've taken that card off the market like 3 times, I think. And it's supposed to launch again this year, but they just nerfed it to the point where it looks like it's going to be pretty trash. I think there's like a cap on the mobile wallet, which is like the whole thing, the automatic like 50% boost through their travel portals taken away. I think they're going to have some transfer partners, but they'll probably be like very basic Wells Fargo transfer partners type thing. But it's just, the cashback cards won't be able to transfer to it. So yeah, I mean, US Bank used to be really cool when they had the old Altitude Reserve and you were grandfathered in. But now it's like, what does US Bank really have besides that one cashback card? And I'm probably making myself look bad by saying that that's the card that I'd start with, but yeah.
No, I mean, I think there's a part where like you start with and where you end with can always be super different, and as long as you're getting value along the way and the same old principles, right? Pay off your bills in full, on time, no interest, all the things. What does it matter as long as you're getting value is my high level thinking. But
yeah, well, I'll spin that question back on you. What would you start with? You starting over.
Good question. Knowing what I know now, I would go with the Discover It secured card version if you just think, hey, I'm not going to get approved. But in reality too, I would just apply. So me personally, I would apply for the unsecured version, thinking that, hey, I've seen approvals with people with, hey, their first credit card, it's unsecured, but they're getting their approval. So you don't need to go to secured route. Yeah, is it more guaranteed of an approval? Sure. But if you're hitting your credit when you have no credit history, just put in a couple applications, put in the unsecured version. If you don't get it, go for the secured. Big deal, And if you do get a denial on that unsecured version, you can still call up Discover and be like, hey, I got denied. They'll probably offer it to you like, hey, we have a secured option. We'd love for you to start there. How does it sound? And they're going to say, hey, we can start you at a minimum $500 credit limit or 200 or what have us, right? And you need to front the money. So having that money up front is just going to start your credit journey, if that makes sense. So again, yeah, referrals are great. If you're like a student and you know people, you're the first person to get to discover it. Obviously, you can be that first guy who's like, oh my gosh, here you go, guys, use my referral link. And that's all fun and stuff. But the reality is once you have that first card, really the big player, in my opinion, like the Chase ecosystem opens up. And there's a lot of controversy of Chase versus Amex, or we're talking about US Bank and Discover. But some of the heavy hitters are, nowadays, I would say, the same kind of big four. So where the big four traditionally would be, from a bank perspective, right? You're like Chase, Wells Fargo, Citi, and Bank of America. But bringing it back, I would say Discover It for sure, first card. And then the second card from there, probably just go for, that trifecta of Chase. Or if you want the Citi trifecta, sure, I go for it. But yeah, the whole floodgates are open after you get that first card and have it under your belt and at least like 6 months of history. So that's what I would do.
Yeah.
What do you say about, go for it.
Oh, no, what were you going to say?
I was going to say, like Chase, Amex, these guys are always like the heavy, marketing heavy, whether dollars or everyone talks about, the Chase Sapphire Reserve, the Amex Platinum. So do you have like a high level view of like these premium annual fee cards? Like, are they even worth it? Or like, do you have a stance?
Yeah, so I have the Sapphire Reserve and the Venture X open right now. And I used to really like the Sapphire Reserve because of the 50% automatic boost that you get through their travel portal. And what that meant for me, as long as I had Chase points, I could book any economy domestic flight with those points for 1.5 cents per point guaranteed, which is sometimes hard to find if you are an economy domestic flyer. But obviously the Sapphire Reserve refreshed, and in my opinion, it's like the worst of the premium cards right now. The Sapphire lounges are all right. I've been to I think 4 of them. Phoenix is beautiful, or not Phoenix. Phoenix is disgusting. I meant Philadelphia. That lounge is sick. But yeah, now, I mean, you just have so many different dumb little credits, and you got what is it? The dining, StubHub,
Apple.
Yeah, and it's like the way I view it is even if you could justify it, like why would you? It's basically a to-do list now. Like even if you're already spending and all that, like why would you want to pay that and then have to go through the trouble of using and tracking the credits when all it really gives you now is access to the transfer partners and then lounge access. But it's the Sapphire Reserve has never been a standalone card. You always compare it to the Sapphire Preferred, the $95 annual fee version, obviously. So all the Sapphire Reserve really gives you now is lounge access. But the lounges are kind of underwhelming. The Ritz, it will give you all the Sapphire lounges. With Priority Pass, you actually get one entrance into Sapphire lounges a year. So yeah, all that's to say that I think the Sapphire Reserve kind of sucks now. The Venture X is great. I think there was a bunch of controversy after they limited the amount of people you could bring into the lounges. But, for an incel like me, that's kind of a plus because there's no families hoarding the table, it's a lot less crowded. And, I think that was a necessary change that needed to be made because, when the Venture X launched and they didn't really have any lounges, there weren't a lot of card holders. The lounges, they could have let as many people in as they wanted. I think with one card, what could you bring? Like 12 people or
15
something
or
crazy? Yeah.
Like 4 authorized users, 3 people each, it's already 12 plus you plus 2 guests, 15 or whatever the math is.
I mean, that's not sustainable. And I think we all knew that. So, that nerf was inevitable. But at the end of the day, it still pays you to hold it with the $300 credit and then the $10,000 anniversary miles. And then, you get all the travel protections, 2x on everything, and lounge access. And you're not paying for that lounge access or having to do anything like you are with the Sapphire Reserve. Granted, there's not as many Capital One lounges, but I think the Venture X is a great card,
Yeah, I will say, I think it comes down, like you flipped the question, like my opinion, is this a lifestyle kind of choice? Where like, for example, if I don't go to concerts, I don't have an iPhone or don't care for Apple TV, if I don't use DoorDash or I live in the middle of nowhere where like it's inapplicable to me and, just certain hoops, like you said, or like the Edit Hotel collection, like, again, if you're not going to go there or if it's not in your like lifestyle, it almost feels like what happened to the card. Like it's good for somebody, but maybe not me or maybe,
Yeah, but even if it was in your lifestyle, like why would you want to go through the hassle of like, I don't need the Sapphire Reserve to freaking book a concert to go see, Kanye. I can just book it with any other card, book it with my Venture X Saver, that kind of goes back to what I was saying earlier. It's kind of a to-do list now. Like even if you can justify it, why would you? Do you really want to like go through the hassle of tracking all those different credits? And there's a bunch of, I think, like semi-annual, and I don't know if there's quarterly ones, I forget, but like, do you really want to go through that hassle for like Sapphire lounge access? I don't know. I don't travel enough to have to go through the hassle of doing that.
Yeah, I'll say 2 points. I think one is the lifestyle part. I agree with you. Like if it's really your lifestyle, then you're not really thinking about how do you maximize your daily lifestyle. In other words, I think this card is perfect for someone who, let's say, spends, just an example, right, X amount on StubHub, whatever, $1,000 a year, let's just say. But they may spend it that one time a year. And off the top of my dome, I'm not sure if the StubHub credits are distributed. I think it's like $150 every 6 months or something.
Think, yeah.
And so if you do all your purchases during the holiday season, then you get $150 off. And someone sees that as a statement credit and they're like, oh my gosh, I got, $150 off. But like the first 6 months, like if they didn't do anything, then really you're not getting that full value. So I think it's almost like us in the niche or like this hobby of everything credit cards. It's really of, hey, we're trying to maximize, optimize, etc. But like the intended user is not really even meant to care for these credits, but they think of it as, oh my gosh, it's a cherry on top. That's what I think.
Yeah, I don't know. In my opinion, there was 2 things that made it special: the 3x on all travel, and then the
50% boost on the portal.
And now those are both gone. So it's basically just a coupon book to-do list now, which I know some people still like it, but with the Venture X out, and I think the Platinum is actually kind of good now for some people, I would rather just go with one of those, especially when the Sapphire Preferred exists. And the 3x missing is a big thing too, because that applied to a lot more than just like, travel. Like I have to pay for parking. That parking garages falls under the 3x travel. So, that was something that I'd use almost every day for work. So yeah, kind of a bummer that's gone too. Airbnbs, that was a great card for.
Now, even me, like paying tolls in certain states, like especially when I was commuting heavily, like that transit category is really powerful.
Yeah.
I have to say, the fact that the Sapphire Reserve may not be worth it, but the Amex Platinum seems to be worth it from what I'm gathering from you. The Venture X, I totally agree. $395 annual fee, $300 credit, 10,000 anniversary miles, like it all breaks even great. So my question to you now is, why is the Amex Platinum that much potentially better than the Sapphire Reserve for a similar premium annual fee.
Yeah, well, one is they have way more lounges. I think, what is it? Like, I forget the exact number. How many more does...
The Centurion lounges?
Yeah.
Maybe 30 to 50 somewhere all across the world to off the top.
Yeah, to what is
Versus the Sapphire lounges?
10 or something?
Maybe 10, 15 tops, or at least planned to be made, something like that. So yeah, definitely
Yeah,
there's
so you're getting way more. And I think the credits on the Platinum now are easier to use. Let's think. You got I'm trying to remember the credits off the top of my head. Yeah. The hotel edit, or no, not edit. That's Chase.
So I'll try.
F8, yeah, you got it.
Fine hotel and resorts. So $300 every 6 months of the year. So $600 in total per year if you redeem it fully. You got $75 each quarter to Lululemon. So $300 in total there. We also have obviously Saks Fifth Avenue, $50 each 6 months. You also have $200 airline credit, which you select your airline and then you can. Some ways to game the system, some ways to at least have value if you're anyways going to spend. Then you also got, $200 to Uber, right? The $15 every month, $35 in December. You also have $240 streaming credit, like YouTube Premium is now a part of it. I think Peacock's back or gone or something. But Disney Plus, Hulu, ESPN, like that Disney bundle, something you still use it towards. Mm-hmm. And I'm sure I'm missing a couple of credits. But,
yeah, what I was going to say is the hotel and then the new Resi credit. You use those two and then it pays for the card pretty much. And that's not, the everyday person might not be able to do that. I have a lot of Resi restaurants around me that are pretty good now. But anyways, the Amex Platinum is supposed to be a premium travel credit card for like rich people basically, right? And before it gave you like a bunch of jokes of credit. You got like the freaking Walmart Plus and then other ones you mentioned. But now I think most likely wealthy people will be going to the Resi restaurants automatically if they live in a city and will probably be staying in nicer hotels, So if they just use those two credits, the card pays for itself. Whereas, comparing it back to the Sapphire Reserve, I guess there's the edit and the hotel, so you could make that same argument. But yeah, I just think, why would you go with the Sapphire Reserve when you have the Amex Platinum that has like double the lounges,
Yeah, I think that the Sapphire Reserve is more for the clientele you described, like the rich people, whilst the Amex Platinum, it seems like whether someone's rich or not, they have a lot of use cases for like that middle tier kind of expenditure. So like Uber Eats is kind of, let's say, wealth agnostic. Let's just say everyone's using it to some degree, go to the airport or not, or get an Uber Black because maybe that's what, certain people do. But I think what we're trying to say is even the Resi credit, I may not spend at Resi restaurants organically, but I still value it as even $50 of the 100 for what I would really spend for me and my partner, So I think the Amex Platinum wins almost all across the board, not irrespective of the client type. Like if you just are in college, for example, like I see no reason why you would need the Amex Platinum unless you travel that much for something, but there's other ways like the Capital and Venture X just to get what you need for free per se. So interesting.
Yeah. Can we do you agree that the Amex Platinum though is a way better card after the refresh than it was before?
I agree.
Okay, yeah, I saw some people disagreeing with that. I don't know how you could disagree with that.
I think you disagree with it. So just like the very high level difference is like, yes, these Lululemon credits are there, Resi's there, and then you have a little more for the fine hotels and resorts. Like all of that is a net positive. Mm-hmm. So like, what's the negative, right? And I think that's what it is. It's probably people that don't shop at Lulu, maybe don't want to eat out or don't go out to eat, so it's already like, what is this thing? Or maybe they just don't know how to use Resi, which was my case when the Amex Gold refresh. They had this $100 Resi credit, $50 each 6 months of the year. There was a little friction for me, even though like so much card, so much quote unquote experience, you still learn something new, So yeah, I don't see how it's worse than before. If anything, it's a no-brainer to me personally. So
yeah. Some interesting lore. I was so close to getting the business platinum the other week.
Oh, okay. Tell me more.
So basically, my mom is buying a new car, and she was about to spend like $20,000 on it. So I was like, oh shoot, the dealer took credit card payments with no fee. So I was just gonna have her like put $20,000 on the business platinum, and then just Zelle me and pay it off, connect her bank account, whatever, and then to just hit the sub because like I don't know when else I would have $20,000 for a sign up bonus. Maybe tax payments eventually, but. Yeah, I was in pop-up jail though. They approved me, but not with the sign-up bonus, which kind of sucks. So I didn't get it, but I was pretty close to.
Dang, yeah, man. Those new card member bonuses are crazy when they are.
Yeah.
So I will say that's our premium space. We've covered the middle space, or like the beginner space, you could say. So now coming to like the middle cards, it's like there's always that spectrum, right? Mm-hmm. Like, what's your view on like $95 annual fee cards or like 150 annual fee cards? Where do they play, a part in someone's journey, or like what is the reason for them not to just jump straight to the platinum or, the Capital One Venture X and call it a day and say, I'm not going to get any more cards? Like, there's so many options. So like, why even get more than a couple of these main cards per se? Is there a reason?
I think it depends on what you want. So if you want to get the Venture X and call it a day, then that's perfectly fine. Or if you want to build your city trifecta or chase trifecta and call it a day, that's great. Like I even talked about that with you last night. I'm like, shoot, do I really want to be juggling and like keeping track of like 15 different credit cards? Like it's kind of annoying sometimes. Sometimes I just want to freeze all my other cards, just have my Venture X, just worry about that one balance to pay off. But a $95 annual fee versus a premium travel credit card, I would pretty much advise, unless you're going with the Venture X, people to try $95 annual fees out first for two reasons. One, because it unlocks transfer partners, and then if you have the cashback cards, so whether that be the double cash, custom cash from Citi, or the freedom cards from Chase, or if you want to be a freak and use Wells Fargo cards, we can talk about Wells Fargo later. I kind of do want to talk about that, but it allows you to take those points and then send them to the transfer partners, use them for travel, can get like maybe even double the value. And the other reason why $95 annual fees are good is because there's usually a really good downgrade path. So let's say you get the sign-up bonus, you decide that you don't want to travel, you can't justify the annual fee, you want to move on to something else, you want to move on to a premium travel credit card, you can then downgrade to one of those Citi, custom cash, freedom cards. I would say most people start with that. And then, I don't think premium travel credit cards besides the Venture X for most people are going to be worth it. Like, because a lot of times it is a to-do list, like I mentioned, and how many times are you actually going into lounges,
Yeah, that's fair. I think what's surprising to me, but it's interesting, is $95 annual fee cards, it jumped to like the Chase Sapphire Preferred to be able to transfer to partners, or a Citi Strata Premier to jump to, transfer partners with your points to unlock even more partners. Where my head was, if you think about like the $99 annual fee, like Expedia One Key Plus cards, or like even with Wells Fargo, the Autograph and Autograph Journey, the Journey has a $95 annual fee. But the beauty about the no annual fee Autograph itself is that you can transfer to partners as well, which has been very lucrative on my side. And with a $99 annual fee like the One Key Plus by Expedia, by Wells Fargo, they give you a $100 credit to Expedia each and every year. So it's kind of like negating the annual fee. So even though we're paying it, it's kind of like, oh, it makes sense. There's obviously your Turkish Airlines, like Korean Airlines, and all these type of other cards out there, which there I think it's $95 annual fee to get the bonus and then question mark, Like if you know nothing about any other card, like our Chase and Amex and these ecosystems, I think that's where it's like after the bonus, it's like, come on, man, there's like a lot of better cards here for free that you could, earn these same miles and points without paying an annual fee after year two and onwards,
Yeah, no, yeah, I get what you're saying. I recently made a video hating on, or not hating, but sort of hating on Wells Fargo. And basically my point was, I don't know why you would go with Wells Fargo over Citi.
That's a loaded question.
Yeah.
What's kind of any more context from a credit card perspective, I assume?
Yeah, well, Citi, I think, just has better multipliers and better transfer partners.
Yeah, I don't disagree. I think it depends what you're looking for. I will say one of the interesting transfer partners for Wells Fargo, this is like more like heavy optimization if you care, but me and my partner, we were planning a trip to Japan. Mm-hmm. And we were like, where to stay? Because Tokyo is so expensive, like from a headline perspective. And believe it or not, Choice Hotels, which I would have never thought about. And I didn't know Comfort Inn was under their portfolio. And Comfort Inn, for anyone that doesn't know, is, you tell me otherwise, but like a Days Inn, Super 8, Holiday Inn, that type of tier, And each point on Wells Fargo transfers to Choice Hotels at a 1-to-2 ratio. So if I have 10,000 Wells Fargo points, that's 20,000 Choice Hotel points, which in America doesn't go that far. But in Japan, it was 12,000 points per night at like many Comfort Inn properties in Tokyo. So what that meant is for 6,000 Wells Fargo points, I'm getting the whole rate of the room, like for like that 150 of value, very similar to Chase's Hyatt points, where like, 5K points is like maybe 125 after taxes per night. And I was really shocked. So that's just one niche, like kind of niche/edge case.
Doesn't Citi transfer Wells Fargo or Choice 1-to-2? Or am I tripping?
I don't know the actual ratio. I'll tell you that.
Okay.
And so if they do, then that defeats this whole use case. But I will also say that when it comes to City, American Airlines, you can't beat it. I feel
Yeah.
like that's one of the last American Airlines, or not that way, but the main Delta, United, American, those three carriers in America. That's the last place where you have value because United and Delta suck for value.
Do you think
Yeah.
AA miles are going to get devalued now that like there's going to be millions of City points flooding in?
I don't disagree. I think it's factually the case. It's kind of like what happens to Hilton or any type of points inflationary type of currency, like any currency that inflates like that. Now you have just a lot more supply of points in the ecosystem and demand, even though we say, oh, hopefully it doesn't change, like chances are people are going to try to use their AA miles. And depending on dynamic pricing and other models that they have, I think it's just mathematically, you can't avoid it, basically. That scenario, unfortunately.
That's the. But I mean, City has some other great partners too. You know, JetBlue is low-key underrated, and I think they're partnering with United right later this year, so you'll be able to book United flights. Yeah.
Yeah. Do you have any view on Barclays credit cards? Because JetBlue and JetBlue Plus cards?
Not really. I don't even really know what Barclays has besides the Xbox card, I think. But
That's funny.
no, I don't really have an opinion. I kind of view them as like synchrony, like just, sort of like random cashback, couple airline cards maybe. But
Damn.
I've never really looked into them, to be honest.
No, that's fair. I've more than looked into them like a crazy person. There's a lot of value to be had. For me personally, I have, let's say, the American Airlines Red Aviator card, which I think that's going to be discontinued.
Yeah,
at some
didn't I think
point.
that is that already discontinued?
Maybe, maybe not, but that's been a big player from the easiest sign-up bonus ever, literally first purchase and boom, 60,000 miles or even more. And then the JetBlue Plus card, it's not really a keeper card, but every year $99 annual fee, they give you 5K JetBlue miles. Those miles are not really worth 2 cents per point at all ever, but that's a very interesting card if you actually fly JetBlue consistently and care about JetBlue status. And now they have this mega annual fee JetBlue card, almost like a $500 annual fee. I think that's kind of whack, but teach their own, right? But no, there's some great cards like Emirates. I think it's Lufthansa is with them too. Worth looking at for maybe not mid game, depending on your use case. It could be in the earlier game, but yeah, like longer term when you get past the flagship cards of all the bigger banks.
How do you feel about the City Strata Elite and then the new Alaska Airlines Premium, whatever it's called, Atmos? Yeah.
That's a good question. I would say they both are like in that premium sphere. I think that if you actually fly, like it really comes down to like if you're doing the activities. I'm not saying to go spend, right? But like obviously the banks, they want you to spend and you keep it going, right? City's more versatile just because I like the versatility of points to, go anywhere I want with what I'm earning versus with the Atmos, like it's amazing value. It's like saying, hey, do you want this asset that's illiquid, but on paper you're rich AF, right? Whilst on the flip side, you have something that you can actually use like a currency versus, this illiquid counterpart. So I think it's that type of thing, right? Do you want, it's probably a bad example, right? But do you want a billion of some currency that doesn't have much value? Or do you want X amount in US dollars because we're the reserve, currency of the world,
So what you're comparing like the Strata Elite and its credits and like points to like the usable currency opposed to what the Alaska like companion certificate that would be like the currency that's hard to use. Is that what you're saying?
Yeah, exactly. Yeah, like so being based out of Atlanta, for example, like Alaska Airlines, I know it's amazing if you're on the West Coast or trying to get there, but outside of it, I have no use case. I have to go out of my way to use it, and even when I use it, chances are, based on my own personal research, like some of the flights, they're just more expensive for me to force myself to use the companion pass slash fare in this regard. So I think situationally, like literally geographically, where you are makes a big difference of like how things are used. Like similar to like if you're from New York, like maybe the Amex Platinum has more benefit where you were the Chase Sapphire Reserve or what have us, at least more back in the day. But that's kind of what I would say. So both are beautiful cards, right? But the use case is always going to
I think they're all right. I mean, they never really excited me when they came out. I don't know why. Kind of the same argument with the Sapphire Reserve and Sapphire Preferred. Like, why would you get the Strata Elite when the Strata Premier exists,
Yeah.
Is the way I think about it. But
yeah, no, I mean, that's very fair. So from there, what do you say about like crypto and credit cards? Like, do you like, hey, you can earn with the Coinbase card or Gemini? Like, any thoughts around how the future of, gathering assets through your normal spending versus traditionally people have cash back, go to the market, redeem it or a Charles Schwab Amex Platinum, like 1.1 cents per point, you can directly invest it into your brokerage. Like, what do you feel about these type of products that kind of cross over? Any thoughts there?
Yeah, I do have thoughts there. So, okay. Yeah, I have a lot of thoughts on crypto cards. So basically the problem with crypto cards is they never last. They're always getting nerfed. They're changing the rewards. They're adding like stupid annual fees. I say this over and over again in my videos, but I call it the crypto card playbook. Basically what almost every brokerage crypto card does is they announce their card. They usually have a metal card. They have some gimmick like M1 gave you 10% back on things. Coinbase is giving you an unlimited 4, Robinhood an unlimited 3. And then they have a wait list for the card for like something crazy like 6 months. They finally release it after having that wait list for so long. And then they give you the rewards for like 6 months, maybe a year, and then they nerf the card. And usually it's to the point there they're completely get rid of it, like the M1 card, or they make it to the point where it's like, not bad enough to where you have to cancel it, but if it was like that when it launched, you would have never got it, which I think is going to happen with the Robinhood card. So these crypto cards are always constantly changing. If you get one, you kind of have to expect it to be nerfed. Like the crypto.com cards, they change like I feel like every week at this point, Like I made a ranking every crypto card video like 8 months ago and it's already completely outdated just because like every single one of those cards have changed or have been discontinued. For whatever reason, credit cards, I know you have a lot of banking experience, so you can probably get into the technical stuff, but they can't give you over 2%. I've never seen it. There's been the Alliance card, that I believe is discontinued now. That tried to give you like 2.5 or something. 2.5. What other cards try to give you over 2%? I forget.
Over 2%?
There was a couple different ones, but none of them. Yeah. X1, I think. I think there's another one that's not coming to mind, but they just don't last. And I get a lot of hate on my take that the Robinhood card will get nerfed down to 2%. And I still stand by that. The only reason that it hasn't been nerfed yet is because there's still a wait list after a year and a half. But as soon as, I get comments on that video like, what a loser, this guy, like what an L take. But like there's still a wait list. As soon as that wait list is lifted and like the floodgates come in and people start abusing it for like tax payments and all that shenanigans, like it's gonna get nerfed. The only decent crypto card is Gemini. I know they've been sponsoring a lot of people in credit card. They've been paying for videos. I'm doing a paid video with them too. And it's the only crypto card that I actually would recommend, and I have been recommending for free because it's the only one that's actually gotten better over time and not changed. I think they've been around for a couple years. They have a sign-up bonus now. The rewards have just continued to get better. So the Gemini card is the only one that is actually like somewhat valid. I don't know too much about the Coinbase card. I think there's some gimmick, like you have to have a certain amount of money with them. I could be wrong, or you have to pay.
Basically you're paying for like the Robinhood Gold equivalent for Coinbase, Coinbase Pro, and then because you're paying that annual fee, then you have this card and it's 4% back, but yeah, it's kind of like a forced annual fee. So I wouldn't get it to pay for that annual fee equivalent to get the card, but you're already like in the ecosystem. If you're the cherry on top kind of deal.
Yeah, I got you. And that's the same mindset with the Robinhood card. And like even after, if you already have Robinhood Gold and because it's Robinhood Gold in itself is pretty good. I used to have it. Like you get the I think like 3% more on your Roth and a bunch of other cool things. So if you're already paying for Robinhood Gold and like you don't care that it's going to get nerfed down to 2%, then it'll pretty much be like the Fidelity card. That's fine. But yeah, I think Gemini card is the only one that's like legit in the crypto space, in my opinion. I don't know if you would agree with that or not.
Yeah, I mean, I think there's a reason for that. Like when you look at assets and how they come to life, like not to get too philosophical, right? But like we use the US dollar because we all agree it is a form of currency. So when there's something newer, like in this case, right, like crypto is still newer to the masses, there's a lot of like, hey, who's going to fund, these rewards that we're paying out, right? Like who's actually buying the, collateral that's basically paid out. So for example, if you look at American Express membership reward points, they're sold, let's say, pennies on the dollar for the transfer partner relationship. So you transfer, for example, 100K MR points to whatever airlines or hotels. It's not like, hey, we look at it like, oh, 1 penny per point value, or hey, 0.6 cents per point in cash, or what have us, right? Like that's not the the actual value when that's being converted with these partners. There's an agreement like, hey, up to 100 million points, and this is not like not advice, but this is not true information. This is hypothetical. But let's say, hey, for up to 100 million points in transfers each and every quarter, every year, whatever, this is the kind of price that the partner would need to pay Amex or whatever arrangement they have, so that they're part of this overall ecosystem for more sales, revenue, whatever targets they're trying to get, month over month, quarter over quarter, etc. So from that viewpoint, if we look at crypto cards, like you said, who's paying for it? Why is it not more than 2% on a lot of cards? If you look at actually how that revenue is tracked, like, do you know what interchange fees are?
Yeah.
Yeah, so like there's that angle of revenue, but there's other types of things, like is there a back end interest agreement, or hey, like you get a shared interest on the back end, you know what I'm saying? So like all these things are related. So if you look at like synchrony or like subprime lending, predatory lending, all the things, right? It's all connected in the different, kind of stratas to it. So all that to say, crypto cards, I love them from a, hey, I can get crypto instead of cashback because I value crypto more than cashback. But what is crypto to me? Maybe for me, it's Bitcoin. I don't really want a bunch of these no-name altcoins, which they can go to the moon, but like I would rather take either a fixed amount in true US dollars, like 2% back, 3% back, whatever, or in BTC, because I'm anyways a long holder for everything Bitcoin. So for me, it's worth it.
Yeah.
But if it's like Dogecoin or what nonsense, like that's cool, but like I don't care enough.
What card would, I mean, there's only a couple cards. Which ones would you actually recommend? Because for me, I think Gemini is the only one that I would actually comfortably recommend, because they have a proven track record over like years now. It's gotten better actually. Whereas, I'm not going to recommend the Crypto.com cards. Those change every freaking week. Coinbase cards brand new. Maybe like if you already pay and you want to use it while you can.
Yeah, Gemini is where it's at, I would say. I mean, I got approved for it. Then they like basically like took it away from me. There's just like I made a video on the channel. It's like my horror story with them, man. They wanted some extra verification, but they couldn't, like it's through AI or whatever.
I've heard some bad stories about Gemini though, like their customer service and approval process and whatnot. So that's. But
they're more like because they're Winklevoss twins. If you know the lore, basically, like I understand, right? Like you're making a business, and now it's all just driven through scalable technology. But it's not like you have a founder who's like, I founded the company, I want 100% or 150% customer satisfaction rate. Like, yeah, I mean, but in the end, it's a game of money. And I mean, I wish they would put more effort into that, but that's me because I got the card and they took it away, right? But if I had the card, everything's just rocking and rolling. Of course, maybe my vibe about them would be different.
Yeah.
But from a brokerage standpoint, I use them heavily and whatnot. So can't complain, honestly. They have their use cases, whether we like it or not. So.
Do you have like the Gemini card or anything?
That's what I'm saying, right? I got it.
I'm not I meant Coinbase. Do you have any other crypto cards? Okay.
No. So yeah, I used to trade heavily on Coinbase, but before they had their Pro and there was some other program for their trading if you're like a pure trader. But no, nowadays it's kind of like, all right, if we're already in different brokerages equivalent, right? I'm like, whatever, man, like why be loyal to one or all eggs in one basket?
Do you like Crypto.com? Not their cards, just the brokerage itself.
Personally, no, but there's a reason. The CRO token / coin, for them, it's like, you kind of know it's not a gimmick, but they were kind of more first to market in the mass market saying, hey, buy these tokens and like this amazing thing will happen. But just like you print money, like, you can buy it today, CRO at 13 cents or what have us, but it can go flash crash to 5 cents, 6 cents. So you're kind of saying like, I have stake in this thing, and because I have this thing, I'm able to get 8% cash back or whatever. But the reality is, yeah, you're getting 4 more percent, but in like real dollars, you may have spent like realistically 50K USD to get an extra 4%. You start doing that math. What is that, like 50 times 25 is whatever that math is, like 25 million or something ridiculous, just to justify in spend to justify that 4% difference.
Yeah, like if you're staking $10,000 worth of CRO to get 4% back, and then your CRO goes down to $2,000, no amount of spending is going to make up. But and
you're still earning, to my understanding, in CRO. It's not just like cash back. So like it's this infinite loop of like, not a Ponzi, but like, sorry to say it that way, but it's just unfortunately the case.
They're actually like real credit cards now. They're not debit cards anymore. I think I think you still have to like stake and all that stupid stuff. But
after they went from like, I don't know if it's still called the Crypto.com arena, but it was definitely like that FTX type of vibe is what I got from them. And just being in crypto before them and them coming to the surface of everything, I'm just like, I'm good. Like I understand the marketing behind it, but when you know more about how the tokenization, tokenomics works, I'm like, I'm good, fam, and let me just stick with the basic Bank of Americas of the world and this part. But then that's where Gemini, because I'm earning in BTC and not, let's say, CRO to convert to BTC and that type of thing. Because there's a whole thing with like Bitcoin mining where like people mine something to then convert into Bitcoin. But if that something is worth nothing, then how much Bitcoin are you really getting? So that's a little different topic, but it's all interconnected,
Yeah. What I was gonna say about Crypto.com's brokerage is it's like a couple years ago I liked it, but it's just they're doing too much now. It's just like you open it up, you have to update the app every day. There's stocks now. There's freaking all these like weird like moon landing rocket ship. Like there's just too much, which is kind of like I recently got the Gemini, just the brokerage, and I like it because it's so damn simple. You can just buy and then you can see there's not constantly. It's kind of like the video editing, you know. I think some videos are over edited where there's just boo in your face, which I think is kind of like Crypto.com's brokerage now. There's just too much going on. But anyways, yeah.
I have a hot take then for you.
Yeah, what's that?
So SoFi,
Yeah.
Chime, like these type of fintech guys, my question to you is, some folks may feel SoFi has too many features. You're checking savings, hey, you want to invest, and you get a bunch of banner ads in the middle of your experience to go apply for like a mortgage or a loan or whatever, and like features, but this is like a technical question, but also like a user experience question, right? What do you genuinely feel? Do you feel that it's just enough? Do you think you grew with the platform over some time? What's your stance on SoFi, but that type of concept,
Yeah, I've only had SoFi for like 8 months now, but I think it's like just enough features. I love their banking. I love the vaults, all the different like relays. Cool. You can like put all your different credit cards. So I actually use that like every day. I look at all my different balances. It shows you all your transactions streamlined. But basically, my answer is I think I love SoFi. I think they have just enough features, and they're a real bank too. If you look at Chime, then I do like Chime. I almost like Chime's user interface a little bit better than SoFi. My only problem that I had with SoFi is the notifications and like they're just trying to sell you a little bit too much. Like, you get some notifications for like when you get paid in the stock market and stuff, but then you'll also get like 3 notifications a day for like personal loans and refinancing your auto, and or like something might pop up in the app at the bottom where it's like, oh, why don't you go ahead and apply for this student loan when I'm not even a student. So, but overall, I think SoFi has just enough. I actually do like their brokerage. Chime's cool, but it's targeted towards like more subprime credit rebuilding stuff. Which is fine, but they're also not really a bank. They're still a fintech, but they are FDIC insured, so I don't really know if it matters that they're not a bank. But I rock with SoFi. I think SoFi is great.
Yeah, I think there's this is like a whole different topic, but I'll open and close it real fast. Yeah. If I'm not wrong, I think SoFi is not a real bank. They're the UI UX, like on top of the layer where they have a backing bank. But if I'm wrong, I'm wrong. But a lot of these. The reason I asked is a lot of these companies nowadays, like if you look at Moneyline, I don't know if you've heard of them.
I have not, no.
Yeah, so there's a few of these guys, basically, they are just what the people see. Like it's all the fancy, nice, UI, UX, like how it looks, but all the actual back end and everything is still very like, it can be legacy, it can be old, it can be whatever, right? But that really is what sells, right? Today or even yesterday, it's all marketing driven, whether go buy the newest Taco Bell taco, it's through the ads we see. Or even when it comes to banking, if they have the dollars or someone backing them, how do we even get to know about SoFi? I remember SoFi had huge marketing, like from a budget perspective, we see it everywhere. Obviously, their product luckily was successful, but there's a lot of crappy products there too, right? A lot of advertising dollars, but the product is, no bueno, so. One
thing, this is kind of shifting a little bit, but what do you think about SoFi stock? Because I know that's going like kind of crazy on Stocky too. Like everyone's like, buy SoFi, but it's kind of, I don't know. I haven't really like done due diligence. It just looks a little bit overbought to me right now.
Yeah, I think it's similar to, there's a concept, there's something called Open Door as well, where it's like, oh, you can just walk up to a home to go tour it yourself without a real estate agent and go check it out, and it's cheaper if you're buying or selling through Open Door. So similarly, SoFi, it's more of that digital experience at the top, like the highest tier, like how Uber Eats and DoorDash is from a user experience standpoint, versus maybe a legacy app where, no offense to like Regions Bank, but like, they're a little better now, but before they were even worse, or like Truist for that example, which used to be SunTrust. So what I would say is like the stock is there, it's all about hype. It's like a meme stock almost, and is there real value in the underlying, everything that SoFi is doing? I'm not saying no, but now is there a premium because everyone's talking about it? Similar to how Palantir a few years ago, I bought it at IPO, and for years, if you just held it, you're never going to hit 100 until more recently, and now 150 and more. So my stance is, anything with investing in general, that's more of an ideology where I would put that in the I was sharing kind of my investing philosophy of like, hey, if you have 90% in something that you can live with is more quote unquote safe or reliable, and 10% if it has the opportunity to 10x, then you just double up your portfolio. And if you lose that 10%, hopefully that 90 goes back to 100, so you don't really lose anything, but you're still taking a quote unquote gamble. And I would put SoFi, no offense to any investors, but personally in that 10% bucket because there's huge upside. But also, I'm not willing to put 90% of my portfolio into it because I genuinely don't believe it like that. So, and then this is more customer sentiment, just a human speaking, versus to your point, due diligence and actual financials are really what's going to give more insight and input. But even that's never a guarantee with nowadays how the market trades, and that's a huge convo.
Yeah.
So.
Did you see Chime just went public like a couple months ago too?
No, I didn't.
Yeah, they launched at like 40 and now it's like down to like 20 or something. But yeah, I don't really invest in companies that have a negative PE ratio, but I don't know how you feel about that.
No, I would say it's give and take, right? What if Chime tomorrow is what America needs? In other words, the target market, right? If that's the majority of users, and hopefully they're not defaulting on their payments or whatever the agreement is with Chime, right? Or if Chime is just that center point, as I was saying, and they just have deals with, hey, Chime is getting the deal flow and they're trying to push these products, people sign up. So they're just a sub-broker for these affiliates and commissions they're getting in the middle. So Chime's not backing, let's say, the lending, in terms of the lending product they're selling, but they're getting a commission for selling a personal loan, a student loan, whatever, right? So from that perspective, if you have a lot of user adoption with, simple context, if anyone knows, Chime, I think, gives out crazy referral bonuses like $100 still, or, $200 in some cases, or what have us. And why that matters is user acquisition cost, right? If you're spending X to make from some customer, like sign up, what is their lifetime value, right? It's simple economics, right? So if you see, hey, I'm spending $200 to acquire this guy, but like on average, I'm only getting in revenue like $67, you're going to be in the red for who knows how long. You know what I'm saying? And just like Uber and DoorDash, like today, is Uber profitable or not? Like, sure it is, but it isn't, and all the back and forth and a lot of hanky-panky, for lack of a better term, in accounting end, right? For better or worse, never tell us the truth. This is a whole other SEC type of convo, but I will say that to me, negative PEs and this and that, like it's going to be all about what are you trying to do? Are you trying to be a long-term holder? Are you trying to trade? Trying to get in and out, right? So it doesn't matter to me if you're trying to get in and out because it's all short-term plays, right?
Yeah.
So the casino hates somebody who walks in, plays a little, and f's off with profit. Where like when you play in the long term in the casino, it's already against you. But in the stock market, it's really going to be how you diversify, and there's no guarantee. Which is why everyone says go long term, invest into your ETFs and S&P 500s and QQQs of the world and whatnot. So interesting.
Yeah.
So what does money mean to you, Daniel?
I don't even know how to answer that. I mean, it's paper that gets me stuff. It's paper that like pays my rent.
How do you feel about spending time for money?
Oh yeah. Okay. I think you have to do it sometimes. Like it's cool to have like passive income or whatever. That's one of the reasons that I like YouTube. I can make a video, and then if it does well, then it'll keep getting views over time, and that can get me referrals. It can get me ad revenue. But I think in the beginning, like you got to trade your time for money.
Yeah, I mean, time for money, I think, is, how it's ingrained into the system, right? Because that's how you get said money. But who's dictating that, hey, you need to spend time to get money, right? It's a concept that money it means something. And so from, the young age or whatever, it's taught like, hey, if you do this much time of work, you're getting money. But again, there's the other coin of like, hey, money is just value that you're exchanging. If, you to me, if I help you with something and you give me $2, someone can still say, hey man, I deserve 20, or a lot of people say, hey, go for the wealthiest people because they're, they have a lot more money. But, there's two sides of the coin to that, right? Like how they got wealthy and stay wealthy isn't by giving away money just like that for no reason. It's actually by being diligent and disciplined. But all of that to say, like, sure, right? Higher commission deals, you're selling something with, $1 million product, you get 10%, that's $100,000. Maybe you spent no time because you have people in your network relative to the person who's cold calling everywhere and they're in the mid-market and never able to sell this their whole damn life, right? So I think there's dichotomy to it.
Mm. Yeah, no, that's a lot more technical answer than I could have given, but
All right, so Daniel, I got an interesting question for you.
Yeah, let's run it.
I love to ask this, so coming back to credit cards briefly here. 5 million points versus $50,000 cash. Which one do you choose?
$50,000 cash, easy.
Why so?
Because I can do like real life stuff with $50,000. I guess I can with points too, but like I can get points. Okay, well, one, those I can put the money the $50,000 into the S&P, even a high yield savings account, and keep it from deflating. Where those points, there's no high yield savings accounts for credit card points. They're going to deflate, and it's going to take me forever. It's going to take me like 20 years to use those 5 million points. So they're going to get devalued. And then also, if I want, I can always get more credit card points. You can get a couple sign up bonuses. Hit the bonus on the. You're not going to. Someone like me is not going to use points that quickly. So, I take the $50,000 all day. I'm not going to lie.
Interesting. So let me ask you this: if you have 5 million points, right? My question to you would be, you'd be using it, let's say, for traveling, right? I mean, just generically speaking. Or else 5 million at Cashback, 1 penny a point is the same 50K. That's why I asked this question. So my question now is, in other words, if you're spending, let's say, 2.5 Gs, right, per year on travel, like it's a number out there in the ether, right? But it's kind of realistic, somewhat up and down. So 2,500 times 20 years is $50,000, not accounting for inflation and, all of the things. So what I'm getting at is, if you invest that 2,500 in cash every year by taking the 5 million points and using points to travel instead of real cold hard cash, so you're basically investing 2,500 of your own money because you're saving it in travel, but just because you're saving doesn't mean you're not investing. So do you think now 2,500 each year for 20 years invested would be better than 50K today at the lump sum, or whatever you're choosing to do with the 50K today?
Yeah, okay, well, the reason that I said...
it's a fun question.
Yeah, no, it is. I've never thought about this, so my answer might not be the most precise, but the reason that I said $50,000 is because I can just throw that into the S&P, and I can get credit card points. Like the credit card points are a dime a dozen. Like there's a million cards you can hit subs on. I can get one of the Amex cards. I can get a bunch of different, airline cards, and I can get those subs like once every 2 years at that point. So I can always get free travel no matter what. Like I haven't paid for any travel in since I started playing the credit card game. So I can pretty much always get 200,000 points a year or more through various subs. So I'd rather just take the 50K, and then, because I can always get more credit card points, I guess is what I'm trying to say.
No, that's fair. All right, interesting question. You win the lottery, what happens next?
I propose to Anthony Venture. No, I think I just keep doing what I'm doing. Like, at that point, I could quit my job, so then I could do YouTube full time. Like, again, throw it in the S&P and then do YouTube. Like, YouTube's what I love doing. So I'd pretty much just keep doing exactly what I'm doing, going to the gym and making YouTube videos. What else would I do?
Why? What does YouTube mean to you? Like, clearly, like, it's not a money thing because you're still doing it. You're still working. If you call it work, when you have no financial qualms. So what does it mean to you?
Oh, you know what? You guys, if anyone's still watching that at this point, you'll notice that Lillette is a very sophisticated, philosophical guy, and I'm a very simple monkey. So all I know is I make YouTube video, it makes me happy. So that's my answer. I don't know, like the philosophical version. I just like making the videos.
Let's break that down, man. Like,
right,
so
yeah.
Is it the published? Is it you clicking record and making this video, like, or is it the publishing? And the context I'll give you is, every time I click record, right, I get so happy. The reason is, growing up, so I'll answer why YouTube for me, if you don't mind. You cool with that?
Yeah, of course.
Growing up, I used to, I'm a social guy, but I was very awkward too growing up because I just didn't know how social dynamics work. But I'm like very open, like, hey, let's have a great time, let's have some fun. And I'm a child actor by trade. TV, film, and theater.
I had no idea.
But now you know. So, but growing up, I was like, it was not like cool culturally and otherwise to like basically go, let's say, do a, major in drama at the Tisch School of the Arts at NYU or Juilliard, or go get my MFA, Masters in Fine Arts. So YouTube to me is my release or my coping or whatever you want to call it, with me still getting to live that version of, hey, I get to do that thing that I like to do and love to do. Even if I'm not getting paid, because it's like, doing the thing, and sharing, your side of things. But then you realize, wait, there's feedback. People are actually getting value. And I'm actually helping people, where I can scam people with thumbnails with Donald Trump and Joe Biden and then show my face. And you won't believe what just happened. I just shook Donald Trump's hand and like not talk about it, right? The algorithm's not going to push that video. But that doesn't make me excited like the views. What makes me excited is if at least one person, right, gains value, it makes me so damn happy. But more than that, it was so annoying repeating the benefits of the Chase Sapphire Reserve and the Chase Sapphire Preferred to people and explaining why one is better than the other so many times. I was like, let me just record it and then in theory send them my video if they ask me, because it's like, dude, I don't need to repeat myself, I can think about other things. So YouTube to me was saving time for my personal self, seeing some like personal happiness, but also realizing that there's a greater impact and people can actually benefit. And in the end of the day, I've made more money through everything on YouTube, what I've digested and learned through like Graham Stephan or Ask Sebi and all these bigger channels like Meet Kevin, who were small before and now they're big. And without them, I wouldn't be here today. So it's for me to like give back to the community is my version of like why I do what I do. So that's why it makes me happy. So that's
yeah. Like I said, you get very philosophical. I'm a simple monkey. It makes me happy, so I do it. I love like. I don't think there's a part of it that I don't like, which there's not, a lot of things are
editing, filming.
Yeah, the whole process. I love like taking ideas in my mind, writing a killer script, being excited on camera. I like editing. I like filming the B-roll, making thumbnails. I make most of them myself. Sometimes if I like can't get a good idea, I'll have Anthony Venture make it for me. But I just love the whole process. So sometimes like I'm kind of surprised people watch my videos. Like to me, like sometimes I don't want to say it's numbers on a screen, but like it's hard for me to believe that like people actually like enjoy watching the things that I like yap about in my room. Do
you think it's because I believe it's because like you look relatable, you act relatable. So my question to you is like, do you think it's because maybe YouTube's audience or whoever's getting pushed to it's like, hey, I resonate with this quote unquote monkey, like, and I'm not calling the audience monkeys. I'm just saying like, you know what I mean? Like,
no, I call my audience monkeys all the time. That's true. But yeah, I think, I don't know, as of recently, I've just like tried to, I guess for lack of better words, like have a personality. Like I feel like so many channels now are just like, you can tell their scripts are generated by ChatGPT. They don't say the things that they want to say. Like I just say the things I want to say, make the jokes I want to make, talk about what I want to talk about. And I never use ChatGPT to write any of my scripts, so it all comes from me. And I think like people can recognize that, even if it's like even subconsciously, But yeah, I just try to be like have a personality, I guess, for lack of better words. And I think I don't know, maybe some people like that.
Yeah. So do you think that when you were a kid, when you were expressing yourself, there was no one to listen? So YouTube is that, or like psychologically speaking, like. Some people say it takes not a crazy person, but someone to keep on making videos like this. But really, it's like, again, it's what your goal is, right? If it's not about the output or the outcome, you're happy doing the thing, right? Mm-hmm. It's like, this is your toy. And as people grow up, maybe they're playing with different toys, like Elmo from Sesame Street when you're young, and then something else. Do you think YouTube would end? Do you think you're going to lose that passion or whatever, the happiness for this toy? If I'm correct, explaining YouTube as a toy for you.
Yeah, okay, let me explain it this way. So I think there's two parts. One is I do kind of like the idea of like growing a channel and I guess like getting some internet clout, because like basically my whole life I've been a loser. Like in high school, zero but no hose. I don't know if I'm allowed to say that. Same thing in college, but I was never really popular. I never really had any friends. So like it's kind of cool to like I guess have like or be working towards a little bit internet cloud. Like that's a small thing, but okay. So the other thing is I pretty much just replaced video games with YouTube. Like first I replaced video games with the gym, and then like basically I replaced video games with gym and YouTube. So it just became the new thing to grind. I've always been like, I don't know if like addict is the right word. I've never been like a drug addict or anything, but I've just always had that personality where I just get addicted to something and then grind it. And sometimes that's like very bad because I'll just, be playing, or I used to like high school, just be playing video games like 12 hours a day. But if I just replace that with something productive like gym or sports or YouTube, that just becomes the new thing to grind. So it's almost like growing the channel and making more money off of it and monetizing it. Like it's, in my mind, it's kind of like a game, like pretty much just a video game, except it's like real life and like you're getting actual, providing people with value and like getting actual real life money and I don't know, status and stuff, if that makes sense.
No, that makes absolutely perfect sense, because that was the same trajectory where I think we have met, we have good convos, and there's like-minded individuals in the space. Mm-hmm. And there's a reason for that, because as I was informing you, and my audience probably knows, but like I beatbox, making music with their mouth, and I went from not knowing absolutely anything to them being, not just, nationally ranked and internationally and all the things, but then being the, like a Ponzi scheme where the things start, where the actual events to be ranked, like, me and the team were like hosting the world championships literally for the whole shebang, right? So seeing that zero to hero in my life was me seeing through that whole journey. And like after that, I felt, well, what is the next thing? Like if I feel fulfilled or that's fulfillment, literally what is the next journey? And so, acting was that style of journey for me where, that went straight to the top, right? I'm not Leonardo DiCaprio, George Clooney out here, right? But in like theater, you could say in certain areas of the world, like I'm top notch. And then here, beatboxing. And then what else? Okay, I love money, cool. I love pennies and quarters, great. Digital money, crypto, amazing. And credit cards, interesting. And then going and working for the bank in the same department where these credit cards are made, literally and figuratively. So, seeing that was another fulfillment of journey in my life. And then YouTube was one more thing, like keep it going. And so I totally resonate is what I'm trying to say. There's certain paths you kind of beat the game, beat the big boss, but then you get to the top and you're like, oh my gosh, I'm creating the game now. And then the question to yourself is, this is more of a question for you too, but what I've realized in my life is, do I still want to be a player of the game? But then when you become the game master, do you really want to still create the game? Because the fun of it was playing the game. I don't know if I really want to create the next credit card or create the next, game basically for the next guy. It's not that I don't want them to play, but you kind of see what I'm trying to say? Like that's where my life has so thus far, like seen things, if you see what I'm saying.
Yeah. Okay, let me see if I'm following. So you're saying, what are you asking? Like, what's the next step? Whether you want to keep doing YouTube or like do something higher? Or,
so let me ask you the first question, right? Mm-hmm. Like, have you, in video games, right? Like, have you achieved, let's say you beat the game, and then now if I tell you, hey, you could make the version 2 of this game, like, I don't know, GTA 6 or whatever, like the game, I don't know too much about video games. So like, how do you feel about now if I say you beat the game to now you can make the game? Like you're the creator of the game versus consuming the game. Like you own YouTube as a platform, you introduce features to the platform versus making videos on the platform. How do you feel about that? What does your gut say?
I mean, I kind of like just making videos, but I don't know. I guess I've never really thought about that,
Yeah, like if you're Mr. Beast, now he's the top, creator on the platform, subs wise. I mean, you know what I mean? Like he's still creating though. Like he's not saying, now let me go own 25% of YouTube and you know what I mean?
Yeah, I'm happy just making videos, I guess is what I'm trying to say. And also like all the video games that I've like playing were like ongoing games. Like there was no beating them, if that makes sense, which I think is why I like YouTube so much, is because like you don't beat YouTube. You can always get more subs, you can always make better videos, and you can always, I think that's like, I don't watch Alex Hormozy anymore, but I think he used to talk about that, right? Like never ending games, like marriage and like business, like that's the most fun parts of life, right?
Yeah. Like that is very, very true. It's like space, like universe, like it's like always expanding. You know what I mean?
Yeah.
So yeah, why are you laughing?
No, I didn't even know that space was always expanding. Maybe that's a casual. Actually no, I guess I kind of did know that, but like I don't know. It's been a while since I took astrology class.
No, it's astronomy, but.
Same thing.
Holy moly.
We gonna talk about our star signs now?
Oh yeah, like Gemini, pun intended. But nah, I appreciate, man, the kind words about like me being an investor and all these things. And I know you had some questions you wanted to wait until we were recording, so I'm happy to just riff back and forth. Like, ask me anything.
Yeah, pretty much the same questions I was asking you right now. Do you think there's a point of picking stocks? Because I'm getting to the point now where I can finally start like putting away real money into the stock market. So it's like, is there really even a point in investing in anything besides S&P 500? Because it's like, that beats what, like over 90 or whatever percent of 99% of like even professionally managed portfolios. So is there a point of me being like the dumb little monkey in my room, like looking, ooh, look, their profits have increased. Like,
right.
There's always like, if you go to all the top analyst buys, there's always going to be like a crazy new stock, but 9 times out of 10, you're not even going to beat the S&P 500. So what's even the point of picking individual stocks?
Yeah, I think that's a good question. So I'm going to target it in 2 ways. I'm going to target it in the why you should only invest in S&P 500, because people go crazy in the comments, right? Mm-hmm. For the people who believe like there's no other path, right? The reason you do the S&P 500 is what? It's not the total market, but it's basically the total market is the understanding.
Yeah.
So that means if you put your dollar in basically everything, and if we assume that everything only goes up, right, on average, then naturally that's why your dollar is going to go up, right? Simple. It's like common sense, which is why, because it's common sense, the average person should have common sense, which is why it's the average path. You're not going to not be rich by doing investments into the S&P 500. You're not going to be necessarily poor either unless you cash out during a recession or you need the money or what have us. So what am I saying? I'm saying I'm going to be very blunt. Any monkey, not you, but any other monkey can also invest in the S&P 500. There's no strategy. Just do it. There's nothing
Yeah,
to
and
think or
that's
talk.
the great thing about it. Like
No, right, and that's why people like it,
Yeah.
right? Because we're in a convenience economy, and like whether before or after, you tell people like just do this one thing, and your life will be solved, right? That's marketing, right? You just need one secret to unlock all the passive income of life, right? Like those type of titles and thumbnails, it's all marketing. So if the S&P 500 is doing what it has been doing and will do, sure, right? But I would consider it like, what type of lifestyle do you want to live? If you're a W-2 worker, like a 9 to 5 worker, or if you have a fixed income of, 50 to 100K, right? Whatever, right? The numbers, they can vary. But if we all assume on this video and hey, chat, like for 50 to 100K for what we're earning, right? And that's it for the rest of your life. Can you buy a $3 million Bugatti, right? Like maybe, but if you look at 100K times 30 years, that's 3 mil gross, not even after tax. You're never gonna do it. Maybe you rent it for a day or 1 hour Lamborghini, $1,000 an hour shooting. That's what the rates are, because you're never gonna live that real lifestyle. You may rent it for a day. So what I'm saying in short is, it's not like you'll be astronomically rich unless you have time and heavy capital on your side. So if you're, how old are you, if I may ask?
21.
If you're 21 years old and you invest heavily from today, you already know all the calculators out there of this many years of compounding. But if you don't want to play the compounding game till the age of 35, 45, 55, 65, whatever, then you need capital today. So my encouragement would be, you can go invest in the S&P 500, but know your number, know why you're doing it, and go figure out how to front load it. In other words, get more money today to go invest it today. So now coming back to the flip side, investing in stocks, individual stocks. Some of the best advice I got, so this is kind of shortening the answer, is that, hey, pick 4 stocks, and every whatever paycheck, if that's how you're paid, or every amount you're getting, $1,000, invest whatever percentage makes some sense minus your expenses, and pick 4 stocks. Equally invest into them. The 4 stocks I was informed upon picking, which I didn't stick to my discipline strategy, but the 4 stocks, believe it or not, I can't make it up. They were Apple, Microsoft, Tesla, Amazon. Can you imagine starting to invest in 2017? And this is,
Yeah, especially, what was Tesla back then? Well, that was
I
right
can't
before
even
it
tell
boomed,
you,
right?
like, you know what I mean? Like properly, because of so many splits and everything. So what I'm saying is, without even trying, it's foolish to say that this wouldn't have worked out. But if you look at Amazon back in the day, their graph never moved, and if anything plummeted if you buy at the wrong time. So this same strategy would have not worked. But in our last 10 years, it would have been beautiful had I stuck with it. And obviously, you don't need to just pick 4. You can pick the 4 stocks maybe as a 50% of your investment and the other 50 in the S&P. No one's saying it has to be mutually exclusive. And that's the whole thing, is people, the average person, think it's very black and white. This is the only right way. This is the way. Because we're a rules-based society. It's because I can say, hey, Daniel, but the moment if I don't know Daniel and I say, hey, Danny boy, out of the blue, you're like, yo, who are you? Why are you calling me that? But maybe a friend of yours calls you, what's up, Danny boy? You know what I mean? So the small but simple difference is, right, there's no malicious intent and nothing's right or wrong. But in the end, what is the outcome? Danny boy is more endearing. It means you know that I actually care about you. If I call you Daniel for the rest of your life, that's fine. But if you invest in the S&P 500, you'll always be Daniel. But Danny boy has its advantages. So this example is maybe not the best, but if you kind of see what I'm saying, right?
Yeah.
A dollar is a dollar, but where it gets deployed, your interest is in percentages. So your benefit on the other side, it doesn't mean you invest $1 and it goes up $1, down 1. It's not black or white. It's $1 and 10%, dollar 12% gains. Okay, it's down 26% this year. So who cares? As long as you're willing to take the risk and your expected value basically from that quote unquote risk, it's all mathematics. So just make more money in the first place, go invest it. And they always say the 3 simplest rules of finance can be written on a napkin. Earn, save, invest. Rule number 1, earn, save, invest, and just keep on repeating that cycle. So go make money, go invest, and have some money to risk in these bets, if you want to call them, into individual stocks. And there's nothing wrong with it, right? For me, I love to trade options, right? People say, that's the riskiest thing ever. I say what's riskier is, in options, you can risk $1 to make 3x, 4x, 5x. What type of, I'm just gonna be honest, what type of idiot wouldn't risk $1 to get 3, 4, 5 gain instead of me risking $1 to go up to $1 8%, right? 8% gain, $1 8, and I could also go down to 92 cents. I invested $1, I lost 8 cents. Oh no, my investment is going down. Like, dude, like you're literally playing in a range. So what's the worst case? You're down 10%, up 10%. So like you can live life and have a heart attack for down 5% on your portfolio, But the reality is you're never going to make real money. And the funny thing is that same dollar in the S&P can still be flash crash down during COVIDs or during 2008s or whatever. So why not take advantage of what you can with the time you have if you're earlier in your life and go make money, and don't be sad about making money. Just use money, and it's just like ammo, bro, for GUN, you know? Not a lot, I don't know, guns on YouTube. I don't know if you're allowed to say that or not, but whatever.
I don't know. Okay, well, I do want to ask you something. I know we're trying to get away from the credit card stuff, but this has been something I've been thinking about. So you said, 3 pillars are earn, save, and invest.
Yeah.
You notice that you don't find credit cards in there. Do you think that people spend too much time and energy fumbling about with their credit cards when they should be focusing on things like making more money? Like, I apply the 80-20 rule to everything in my life, fitness, YouTube, everything. So it's like, if you're putting 80% of your focus on credit cards and maximizing all the reward categories and hitting the subs and this and that, like, are you kind of missing the big picture? Like, I don't know. I know there's a lot of people in like Discords that spend like hours a day, and like no hate to be the people that run the Discords and stuff. It's like, fuck, man, are you really like, I'm trying to.
I got you. I'll say it like this.
Basically, what I'm trying to ask is, do you think people get too autistic with credit cards and they focus on the wrong thing rather than just making more money? Because sure, you can hit a sub for like 60,000 points, 100,000 points, but you could also put that time and energy into making like an extra $1,000 a month, and that's going to blow away all the subs you can hit.
Yeah. So I think life is all about risk versus reward. If you have good credit, if you're not going for like a home loan, an auto loan, or some type of big loan product, then everyone who gets a stick, up their bum about, oh my gosh, if I get a hard pull, my credit score is going to decrease. Oh my gosh, I'm not going to get approved. That's just not true. I got applied for 20 cards right after I had some income in the same year, and I just kept going and kept going. I'm not saying that's right or wrong. The answer to your question is, when I was earning less income, that $200 sign-up bonus after $500 in spend that I was going to do anyways meant so much. If you're earning $10 an hour, you got to earn 20 hours in a week, and this 200, like nowadays it's taxable and everything, but like back then it was a little more like weird and gray, like you don't get a 1099 for everything. Point of the story being, there's a time and place for everything, right? In my eyes, credit cards, assuming all the discipline and all the good financial habits are there, they're great when you're earning just less money, because who's going to give you $500 for opening a checking account and doing qualifying activities if you can meet them based on whatever direct deposit requirements they have? So basically, I'm saying in a simple way, it's not worth the time. But where it is worth the time is, if you have a scalable business with credit cards and you have these referrals and all these things, that's awesome. For me, I was telling Daniel last night, for me, my business at the time, with everything beatboxing, was having these major events to then get sponsored, to then have videos of it, just like here on YouTube, to have scalable content. And those sign-up bonuses and offers, miles and points, were used to fly talent who would then, let's say, get views, but they're also just happen to be friends, which is a cherry on top. But it's free money, quote unquote, to be used into a business to then generate more money. Or in other words, why do we invest? It's putting capital we earned by spending time traditionally to then have an income generating asset, aka passive income, or dollars working for you, because the time you spend is already done. Daniel, you record a video, you're getting money paid over time. So is it worth it? It's a skill. If somebody doesn't have the knowledge, information is what value is to people. If you have information on the Fidelity 2% card, you want to talk 20-minute video about it, right? Because you can, that's awesome. And if someone values that, then that's even better, right? Today we have ChatGPT and information is available like this, so that's a different topic. But long story short, the easier something is to do, the less it's valued. Which is why tailoring in America, for example, is super expensive to like get your suits tailored, because it's not an occupation that people are like so much supply of the labor, because everyone wants to do anything else. Where somewhere else, if there's a lot of handiwork, handicraft, somewhere like India, for example, tailoring is dime a dozen. Ironing your clothes, dry cleaning equivalent, dime a dozen. Because anybody who is a laborer can do that. Whilst it's flipped in more fully developed economies, more of that handiwork is more expensive because everyone's used to doing anything else. So I know it's a long answer, man. So let me pause there.
Yeah, no, I rock with it. How do you think handling your money should change if you're making, let's say, $1,000 to $2,000 a month, and then the $2,000 to $5,000 range, and then let's say 5 to 8, and then 10,000, and then 10,000 plus, 20,000 plus, like just some different ranges. How do you think the way you should view and handle money?
Yeah, so good question. I think there's two parts to it. There's the actual financial truth and then the intangibles. Are you familiar with Maslow's hierarchy of needs?
Yeah. Like Gooning's the top, and it's like water, and then like that one.
So basically at the bottom is, okay, got it, that was a joke, okay. I was like, whoa. So the bottom, it's gonna be your minimal, like basic needs, right?
Yeah.
So what that means is, just your shelter, water, basic food, rice and beans, whatever, right? For you to survive. What happens at the $1,000 to $2,000 level, at least in today's economy, right? Like maybe $1,000, $2,000 a month, 40, 50 years ago is like a lot of money, whatever. Today, if we assume that you need, let's say, how much would you say a single man who wants a decent lifestyle, not living, in the hood, not living, just like you're living a comfortable life, whatever the heck that means.
I don't know, maybe like 2,500. I live pretty comfortably on
2,500. All right. So, person needs 2,500. They're earning $1,000 to $2,000 a month. Clearly, especially if they don't have any credit or no way to take debt, not that they should, they're not going to make their ends meet. So naturally, right there and then, you got to figure out, how can I make more money? Because saving is not going to allow you to get 500 more. You literally need 2,500 minimum, period. And if you have kids, wife, or whatever your life setup is, you could need more money, right? You got an aging parent, what have us. It is what it is. So 2,500, you're gonna have to make more money. So the question now I flip to you. Let's say you have at least hopefully some time and you're not maxed out in your whole month to make that $1,000 to $2,000. What would you do to make an extra 500 a month at minimum to meet that 2,500? Like based on whatever
me personally,
skill.
I just make a YouTube video, but I think there's jobs that you can get pretty easily that pay like more than that,
Yeah, but I like what you said. You said basically, I can make a YouTube video or maybe 5 YouTube videos or whatever, right? Because you have a way to make income today through this skill/platform, and there's a scalable nature, so some videos may make even more. Even if you don't want to make only 500, you may make 1,000, right? Mm-hmm. Versus traditionally, maybe, let's say I used to do Uber Eats and DoorDash. It's like a skill I consider, because you give me a car, I have nothing, right? Let's say I have other skills, but if I have at least a car, I can make cold hard cash in hand, even if it's not a lot or not. I can make 100 a day, 150 a day, or like pure profit, even if it's 75 a day. I sleep in my car, guess what? 75 times 30 is what? 2250 a month, something like this, the math. So what is that? That's already almost my 2,500. Just an example. It's not the best example. I have car insurance, other bills, but you get what I'm saying. So great. That's awesome, right? You have a way to make 500. All right, now next question was, you're making, let's say 3 to 5K, right? What do you do? So now 2,500 is our base case. So now we're saving 500 to 2,500 a month, right? The reality is what? How are you making the 2,500 is what I would question. So in other words, if you're young, you're physically good, hopefully nothing happens to your health, whatever, you just keep working, grinding, keep going, it's okay. Like the money keeps coming in. But the reality is what? If someone's older and they're watching this, or as you age, you've realized, dang, what if I'm sick? What if I'm sick for a little longer than expected? What if something happens? What if? So emergency funds, as much as I would hate to put cash aside because it's not growing, it's not being invested, the truth is, you bought yourself time. This is really apparent in like beatboxing, acting, the arts, where there's not a lot of money today, or being a comedian, but you need time to do your reps, to do your open mics. You need your burn rate to be as low as it can be, so you have time to go for that random exposure event where you're not going to get paid and you're actually spending some money to go there, but you may get in your socials or whatever the metrics are, maybe an extra 1,500 followers, because somehow that's just how that works, and that will generate you an extra 50 cents a follower, so you just made $75 extra a month for the next perpetuity, right? Like, made up example, but very real how it works, So all I would say is, you're now almost at a point where you can say, hey, I'm saving 50% of my income. It's up to you. You want to go invest 500 of that 2,500 that you have in surplus to go try learning the market. I think that's the best way. Start with small money so you know how it feels. I always tell people, if you see $10 on the ground, are you going to go pick it up? Many people pick it up, right? So in other words, I always tell people, like, if you're going to invest your first dollar or first amount, what is that amount of money where if it's on the ground, you're going to pick it up and you feel bad if you did not pick it up? So $10 to invest today, you can start investing with as little as $1. But if you want to see like $100 of gain, you got to risk, quote unquote, more money to see the reward.
Yeah.
You know what I'm saying?
Yeah.
So my question to you is, how do you feel about that? Like emergency fund, or like saving cash, or having a buffer? I know it's not the sexiest investment, but what are your thoughts, like at this level of 3,000 to 5,000? If someone said, go make YouTube videos, go work out, and just save on the side until maybe X amount is saved to start investing, or you can start investing at a small amount? How do you feel?
You know what? I don't think I have, honestly, enough experience in investing and just general life and saving to like actually tell someone what to do.
For your situation. Yeah.
Okay, for me, yeah, get my emergency fund. You know, probably I'm happy with 3 months, and then just invest the rest.
Yeah.
I mean, I don't know what else I'd do with it. I don't really care to buy anything. I'm fine with my car, my apartment, so I just invest it because like, what else am I going to do with it? I guess is my simple answer.
Yeah.
All right, next question for you. We didn't really get it to the upper ranges, but I think it's fine because like
Sure.
you just keep investing.
I mean, really what it becomes is like, I'll keep it short if you don't mind, because I think there's value.
Yeah.
So if you're earning, let's say 5 to 10K, let's just say, okay, like you keep doing the same path, right? Maybe you're investing. But there comes a point where some of the best advice I've heard, which is very crucial and true. If you have 50K cash, 100K cash, whatever that number is, like of a big amount, right? If you consider that a big amount, you can access investments which are not the same dollar fractional share of Apple or Google, or getting a multifamily unit in real estate. Like, that's cool, but what about those access to plays, things that you just can't get in because you need to be, let's say, an accredited investor is more of earning 250K in income over the last 2 years. But I'm saying there's access to a deal where you need so much capital because that's just what it is. Maybe it's a project that's being built, what have us. So that's kind of what I would say is, when you earn in those higher echelons, there's normal investing, but having access to cash to get into something which can 3 to 5x, which is way different than S&P 500, always be okay and willing to do that if it's a part of your investing lifestyle or like your thesis. But that's where like generational wealth can easily happen without just waiting for the S&P to grow over the next 40 years, compounding at whatever 7 to 10% year over year.
I guess this kind of plays into it. Why would you ever get into real estate and like have to deal with tenants and renting it out and renovating, repairs, all that stuff, when you could just throw it in the S&P and earn 10%?
Yeah. It's all about the convenience, right? DoorDash, Uber Eats comes to your door. S&P gives you 7 to 10% on average year over year, where with real estate, the beautiful part about real estate is it's about leverage. So in the stock market, we have the concept of margin, where let's say I invested 100K, I can borrow, let's say 50% of my portfolio and do whatever I want. I can buy more stock. I can go take that cash and do something else with it. So basically in the stock market, without leverage, you're just putting $1 in, and whatever that dollar grows is what it grows. With margin, I'm not saying to trade on margin or to invest with margin, because margin comes at a borrowing interest rate. Just like when you're borrowing for your home loan, there's a mortgage interest rate, right? So it's a choice of, do you want to lever your position or not? So the stock market, straight, right? Invest, let it grow, okay, period, done. With the real estate, if you look at it, it's about the cash on cash return. The beauty about real estate is it's already levered if you choose to get into the deal that way. So in English, that means if a home is 250K or 500K, if you have all that cash, go buy it in full, done, it's yours, period. No ifs and buts, it's all you. And if it's for investment, you could still buy it in full, and now you have to put up with the headaches of tenants and blah, blah, blah. You have a paid off place, but if you're getting, let's say, 2K in rent, and there's property taxes and other, associated just maintenance costs for a home, right? But let's just say you're profiting now 1,500 cash flow because you own the property outright. Now that sounds pretty great, but if that tenant's gone or not, the mortgage still needs to be paid, question mark? No, because you already own the asset. So there it's pretty clean, right? Property taxes, depending on where you are, they could be 1, 2, 3, 4% of where you are, like Texas versus Georgia versus somewhere. But now coming to the more conventional, like average person, you could say investment into real estate. If it's a $500,000 home, 50K down, 10% down, right? So what happens now is, let's say that 50K goes to, in other words, the $500,000 home now goes to 600K. So what's really going on? You have 100K of equity here, 500 to 600, but that 50K allowed you to earn another 100K on paper. So you just doubled your money, right? In theory. And it's not really in theory, it's the truth. And in that deal that I just described, you put 50 and you gained 100. So actually 50K is still your money. Then you have plus 100. So now 150K is yours out of $600,000. So 25% of that property is now yours. So really it's about which game do you want to play. You can be levered in your money, you can be on paper wealthy, right? But it's illiquid. Your 50K, now it grew 100, but can you access that 100 without cash out refinancing, without selling the place, without taking a HELOC and doing whatever else you want, which is a home equity line of credit? So I'm not going to say that managing tenants is the best thing or not. You can also hire a property manager and then pay them a cut and like still feel like it's like the S&P, like, oh, it's hands off, but it's never really hands off. So in the end of the day, in the long term with real estate, you can get into a deal where you control a huge amount of asset value with very minimal down. And if you do that safely and securely and accumulate multiple properties over your lifetime, you're kind of done. Done meaning if you have like 10 million target, it's doable. It's very doable. But in the S&P, how the heck do you get $10 million in net worth? After 40 years of compounding, by putting whatever the math is going to be, I love, if we had some numbers, but you got to put literally probably, if you're 21, you probably don't need to put as much. I'm making this up totally, but like maybe 2 to 5 grand and you get to 10 mil by the age of 60, whatever, you know what I mean? Maybe not 5 grand, I think you'll exceed 10 mil, but you get what I'm trying to say, right? So it's either waiting time, and with real estate, you're waiting as well, time-wise, and the market has to support. But with the stock market, it still has to support. So long-winded way of saying you pick your poison, basically.
Okay. All right. Can we talk about more life stuff?
Sure.
So you just turned, 31 pretty recently?
Yeah.
What do you think the biggest mistakes you made in your 20s were?
Biggest mistakes in my 20s, financial mistakes or life?
Just in general. It could be either financial, life.
Yeah, I would say the biggest thing is TAM, total addressable market, not knowing this simple phrase, where beatboxing, it's a passion of mine and I love it, but the amount of time and energy I put into it, definitely if it was focused into something that was maybe $1 billion market, right? Or a $10 billion market, and if I worked, let's say 10 years in that $10 billion market, if I could get even, let's say, 0.1% of 10 billion, extracted as value or added value, right? 1% of 10 billion is how much?
1 billion. I can't do math.
It's okay. So 100 billion, 1% is 1 billion, right? So 10 billion, 1% would be?
100 million.
Yes. And then 100 million, 1%, 10% of that is 10 million. So in other words, over 10 years, to make $10 million from a $10 billion market, I'm not saying it's guaranteed, but at least I know that, hey, if I don't hit that percentage, maybe 10 mil is 5 mil, right? So the point is, if you think about it like a total addressable market, how big is that lake or ocean and how much are you willing to do and, F around with the situation, right? Versus, let's say, beatboxing. For me, to be honest, maybe it's a $500,000 market. So I can control it all, but it feels capped unless if I grow that market further, right? And so that's cool. 500K is not a joke. Like maybe year over year, you're making it amazing, great. But the fact is, why not make 5 mil? Why not make 10 mil, right? So it's not a mistake, but it's something that I realize, what you concentrate on, even though you really love it and like it, you really need to think about what happens, like they say, the most dangerous people are people who think in decades. And I felt I was thinking in decades, but I was thinking in decades for a total addressable market concept, which didn't align with where my lifestyle, where I wanted it to be at. So I don't have any regret or remorse, but it's okay, this is what it is. I'm still at 31 now, so what can I do in my 30s, my 40s, and with all this knowledge, right, there's other ways to hockey stick back to where I think I want to be. But definitely time is precious, time is priceless, blah, 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 can't go back. So that's the biggest one, I would say. So if it's YouTube, right, for example, when I saw Graham, right, we see, wow, Graham Stephan, how much bigger are your numbers, right? That really inspired me to say, wow, even if you make 10% of Graham, 10% of Meet Kevin, you know what I mean?
Yeah.
I was like, oh wow, there's something here. So what about you? Where do you see yourself 10 years from now?
I have no idea. I don't know. I can't even answer that question, to be honest. I don't know. Hopefully good things.
Okay.
Where do you see yourself in 10 years? Nice. Where do you see me in 10 years? What do you think I'm going to be doing in 10 years from now?
I think you remind me a lot of myself 10 years ago. Not saying that's good or bad. It's where you are in life. As long as you have the energy that you exude and you intentionally put it out there to try things, to do things, put yourself out there, that's the priceless, activities you need to do to get anywhere, period. That's step one. Step two is now doing that type of activity. It's like sales, you're cold calling every day, but now doing it in the industry that you want to be aligned with 10 years from now, or you think is the correct thing. And then if that's the majority of your time, if it's focused around making money, that's option A. But option B is some people are like, oh, I wish I just made some money and then now I'm chilling, I'm not doing jack, So you can only answer that, for yourself. But for me, I was thinking about it always, over when I got to know about it, is consumption versus creation. I'm like, dude, after you consume a lot of whatever your vice is, it's like, okay, dude, grow cool, but it doesn't fill any void if there's a void or it doesn't make your heart happy, it's like I get happiness from creating and sharing the joy. And as fruity as that sounds, I just like, like I like having a good time with other people. I'm a very social person.
Yeah.
If you put me alone, you give me, there's like two things that someone told me in my life. If they give me $2 billion to not do the thing I love most, would I take it? And I was like, no, because I'm not living then. And on the other way, if I'm all alone and you give me, $1 trillion, but I can't enjoy with anybody. I'm at the top of the mountain and I'm all alone. Like, you can drink, you can do all the things, but how much are you gonna have fun? I mean, some people are loners. That's cool, but I don't identify. I'd rather be broke AF, but we're all enjoying together and all building together. Because I realized the strongest relationships are from the struggles we share, because we rose from zero to hero, versus all the political crap you see when people are like better off and lawyers and stuff like that get involved, because it's like, I don't know you, you don't know me, why'd you say this? I'm calling my lawyer. Like, I think that's so dumb when you look at the whole world as a whole. Just have some fun, have a great time, what the heck else you want, in my opinion.
Yeah, no. Another thing I wanted to ask, and you don't even have to answer this. So you've been doing YouTube for a freaking minute. And I know you started around like the time like Daniel Braun started, and your channel hasn't had that much growth. Does that bother you? And do you like get, I don't know, maybe frustrated with growth of other channels that start around, even new channels that pass you? How do you feel about that?
Yeah, I think it comes down to the identity and how much value you put on that thing. I think in the beginning, jealousy is not the right word. I think Oprah said it like jealousy versus envy. So jealousy is like, oh, you have like a kid sees another kid with a lollipop. They're jealous because they want that, But envy is like I'm envious. Like let's say Daniel Braun example, great example. There's envy, but at the time, because I was trying to grow, they're trying to grow. But I'm not jealous. Not that I don't want what he has, but it's I wish I had it, but I don't not wish for them to not have it. Mm-hmm. Like, I want their success, I want their growth, I want everything better for the person, because I'm a very mutual beneficial situation type of thinker. But that doesn't mean I want to take it. If it meant taking away from someone, it makes no sense. To me, it's not fun. So all of that to say, when you really want something and someone's getting better results a lot easier or whatnot, not to get into the sexism phase of everything, but there's, let's say on the women's side, if they're purely judged at a very superficial level on the UI, right? Like how they look, okay? And that's a weird phrase, but how they look, right? If one girl has more followers, more attention because she looks a certain way, versus another girl maybe posting double, triple, but she just doesn't look how this individual looks, they're not going to get the same final result, right? 1 million followers, 10 million followers, whatever that metric is. So with that said, yeah, it's frustrating a little, if not a lot. But then I realized, okay, what can I really do about it, right? What market am I competing with, right? So there's a lot of that as well, It is what it is, basically, in the end. As long as you're doing the reps and the right things, and if you're not getting the result, then go try a different, way, like an angle, because clearly going on the path is not giving you the same result. So, yeah, frustration, but I'm not here to give up. Let's put it like that. I'd rather try than give up. Mm-hmm. That's my nature.
That's good. Yeah. All right. More serious question. If there was a if there was a credit card like YouTuber boxing match and you had to fight someone in the credit card niche, who would you want your opponent to be?
That's a good question. Anthony Venture, I know he's very strong. I know you're pretty athletic. Trying to think, like John Liang, he seems agile and fast.
But you'd probably want to fight someone that isn't agile and fast, huh? Because then you'd have like a better chance, yeah?
Yeah, but I'm thinking who that could be, Daniel Braun is, we're the same height, he's taller than me. So no, Spencer Johnson though, maybe. Spencer, I love you, but maybe, maybe I'd win against you, maybe.
Yeah, I could see you pounding on Spencer, I could see that.
So Daniel, last question to bring us home, you ready?
Yeah.
All right, well, right before we get into it, if you want to invest into the next Hilton, Hyatt, IHG, Marriott hotel, I'm literally building it, and we can do it together. So from revenue sharing, profit sharing, get in touch. There's a link in the description below. We'll talk one-on-one and take it forward. So with that, rumor has it that you've never traveled outside of the U.S. Is this true?
Yes, that is true. I don't know if that's a rumor. I don't know if anyone cares about me enough for that to be a rumor. But yeah, I've never left the U.S.
Yeah, I mean, something like that, it would, spark my curiosity, you know what I mean?
Yeah.
So anyhow, all the jokes aside, so where would you go? When do you go? Like, walk me through, like, what's the big plan, if you have a big plan, and
Yeah,
et cetera?
so initially I was going to travel for a year straight. That was just like a crazy idea, live in like 6 different countries for like 2 months each. I actually booked the first flight with Anthony to, not like with him, but he helped me book it to Japan. That's where I was going to start. A couple different Asian countries, Cape Town. I had a list of them, but now that I have a decent job and I just want to stay at home and grind and make YouTube videos, but obviously I still do want to travel. I've always wanted to go to Thailand, obviously for the lady boys. That's the main reason. But no, the other reason is Muay Thai. I trained that for like 2 years, but I think it's always been like a dream to like live with the Thais for like 2 months, train in Bangkok or like, I don't know, Tiger or something. I think that'd be sick. Japan I think would be cool, Cape Town, but I think definitely Thailand. It makes, like we were talking about, like it makes sense to go there. Like it might be difficult to just spawn into like Taiwan with no friends or no like nothing and just like try to have fun there. But if I'm going to a country for like a purpose.
Man, thanks for coming on, and I'll put Daniel's channel link in the description below as well. And thanks for coming to the end. See you in the next one. Peace.